Hi, everyone. Welcome to Fawcett's Neurotech Group. I'm really excited to have Dana Watt here today, and she is going to tell us a little bit more about how to build neuroscience, neurotech companies, what she's looking out for as an investor. We've had the big pleasure of having had her on for 2 Vision Weekends now in a row. After I've met you, I think at 50 years, once at Todd Huffman E11 hosted event, which was so thank you so much for joining us. Yeah, you'll briefly be presenting. I'll ask some intro questions, and then we leave it mostly also for others to ask questions here in the room. And this will also be shared afterwards on YouTube. So thank you so much for joining. Really appreciate it. And the stage is yours. I'll share more about Breakout Labs here in the chat.
Seeing my screen today. Good morning, good afternoon, good evening. I know we have folks calling in from all over the place. So thanks for taking the time. Excited to tell you guys about something a little bit different today. I'm no longer actively researching or at the bench or anything. So today we're going to talk about a very specific non-academic career that I pursued, and then talk about how I got into VC as a scientist, how venture capitalists think about deploying money, and then neuroscience and venture capital specifically. So I am a neuroscientist by training. I did my doctoral work at WashU St. Louis and knew that I didn't want to go the academic route. I happened to be in town at a time when bioentrepreneurship was taking off, and all of that was really growing in the St. Louis ecosystem. So wound up co-founding a company that raised enough pre-seed capital for my co-founder to go full-time, but not myself. So I took a day job in the Entrepreneurship Center after we both defended our dissertation, but continued to moonlight as a founder in the background. And at the Entrepreneurship Center, for me, it was really about institutionalizing support for faculty-founded startups and getting them SBIR and STTR support. We also founded and stood up a holding company while I was there. So that was my big project called Platform SPL. So as we were onboarding that CEO and my time at the Scandalaris Center, which is the Entrepreneurship Center, was coming to a close, that was also the natural ending of my company. We were unable to fully allocate our brand, so we had to wind down. So I started thinking about next steps. I thought that I wanted to be a founder again eventually, but that I would be a much better founder if I understood the VC side of things a little bit better. So I joined a strategic healthcare investor, investing at the growth stages, and realized pretty quickly that I liked the venture side of things a lot better. So decided to build my career there. So I was at Ascension Ventures for about 3 years, learning the ropes, learning how venture worked. But AV didn't really do a lot of deep tech investing, and I'm a scientist, but I wanted to do fun science things. So I've been with Breakout for the last a little over 3 years, started as a principal, now I'm a partner. And I'll say before moving on to what my job actually is today, that I see more and more PhDs in venture nowadays. It used to be very specialized. You would see them in like the Boston ecosystem doing these kind of blue chip, very standardized biotech investing, but biotech investing is very much at an inflection point. So I see PhDs in all sorts of different firms now, and happy to go into that if folks want to learn more there. So what exactly is my job as a VC? I think there's a lot of misconceptions about what it is we do and how we think about the world. So I just wanted to quickly go over what I'm paid to do. So first and foremost is my job is to make money. The rule of thumb is that you want to 3x net on a fund by fund basis. So if I raise $100 million, I have approximately 10 years to turn that into $400 million. There's a lot of different ways that folks think about doing that. So we at Breakout were deep tech specialists. So we only do biology. There are funds that do, like Andreessen Horowitz is a fund or a firm you might have heard of. They'll do everything from therapeutic platforms like we do here to social media platforms. So they're generalist investors. That's one attribute. We're a pretty concentrated firm at Breakout, so we make fewer than 20 investments per fund. I know firms that make 200 investments per fund. So that's, a different strategy that folks take. There are folks who are happy to have a lot of exits in the 3 to 5x range. And there are folks who say, I make 20 investments, I need one of them to 100x, and the rest I'm okay going to 0. So there's all different ways that VCs think about the world. And all of that to say is that not every investor is the same. We aren't just money in. We're going to be partners with you over the multiple years that it takes to build a company. And so finding the right investor company fit is really critical. Also within a firm, we are businesses ourselves. We're startups ourselves. And so who you talk to in a firm is also really important. And I say this to say that the most senior person is not necessarily the person that's driving the most deal flow and is the best person for you to talk to. My bosses, we're fundraising right now. And so that's a lot of where their attention goes is get us money to invest. Then they also do a lot more on the operational side than me and more than some of the more junior members on the deal team. Figuring out how a firm works on the operational side and who the right person is to talk to is also really important. Second job as a VC, you can think about as underwriting risk. So venture investments by their nature are very risky investments. And so there's no such thing as a risk-free investment. And our job is to understand what's not risky about an investment, what is risky about an investment, and minimize the number of, they call them unknown unknowns. I understand that any one of my portfolio companies could fail, and I want to know the reason why it's going to fail before that happens. So hopefully I can get ahead of it and make sure that they're successful. What you don't want is a company failing for a reason that you didn't anticipate. That doesn't feel good. And generally speaking, VC firms will specialize in underwriting to a certain type of risk, but all companies land somewhere on a spectrum of these 6 buckets of risk that you see here. And so we at Breakout think of ourselves as being really good at underwriting to technical risk. We like a good, technically risky company. We're not as strong as at underwriting to market risk. That's just not what our specialty is. And so we're looking for investments where it's a hard thing to build, but if you build it, you know that there is a big multi-billion-dollar market, lots of people that are looking to buy that solution so that, you know, if you're successful on the technical side, you don't have to worry about being successful on the commercial side. But there's also folks out there that, you know, want to find things that are easy to build that are harder to sell, and thinking through, you know, if you're working on what might become a company, where you lie in each of these risk buckets is always helpful. When all of those things align, the last part of my job, I would say, is to actually make the investment and do the deal. So there's quite a few instances where the company might be right, but the deal is all wrong. So my job is to not just find the right company to invest in, but invest in it with the right check. So this first of all means getting a company at the right stage. So we're not investors that can put, you know, 500 million to work in a single investment. We have to do earlier stage investing, and that's where our sweet spot is. But there's specialists all along the spectrum. Syndicate refers to when multiple investors come into a company and invest in them, which is very popular in today's market. It's a really tough market out there. So folks want to have multiple pools of capital around the table to support a company throughout its lifetime. And that complicates the story of not only does the company have to be right and the team have to be someone that I want to work with, but also the other investors around the table have to be folks who I think I'll be successful working with, since we're all going to be investing together. And then if those things are aligning, we can start to talk about terms and ownership. So you might also hear the word valuation, right? And really what we're looking for here is to have enough of the equity of a company such that when it does have an exit, either through an IPO or a merger and acquisition, we're making that return, right? That is within our target. And so it's not just about, again, being that right company. It's also about being the right deal. So with all of that in mind, I wanted to talk about neuroscience and venture and what some of the, like how to think about making a venture backable company in neuroscience, and then what some of the biases against it would be. So I think that venture backable companies do share a couple of common things. And the first is a really exceptional team. I don't know any VC who doesn't put team as, you know, the first part of their memo, the most important thing that they're underwriting to. And that's because venture investors are almost never passive investors. They're usually working with these people and frequently for 10 plus years. So having an exceptional team, which means not only being someone who is good to work with as a founder or a CEO, but also is the founding team, do they have complementary expertise? Is there someone who understands the operational side of things? Is there someone who understands the commercial side of things? There needs to be balance among the team members. And the team also needs to be able to have the right stuff to recruit really exceptional people in the future, because most teams are going to grow from, 2 or 3 people to 15 to 100. And so are they going to be able to attract 100 exceptional people? Venture-backable companies by their nature need to be working in billion-dollar or preferably multi-billion-dollar market. If it's a $500 million market and no company is ever going to capture 100% of that market, then that's really difficult for us to hit our return target then, right? And so that doesn't mean the problem isn't worth solving, but it might mean that venture is not the right way to support me going forward, because venture investors have to drive. Companies need to do something that's defensible. Usually when we're talking about neuroscience, there's probably some technical IP that you'll see when I go through our companies. There are also companies that are building more of a data moat. So I can build a data set that's really difficult to replicate that other folks don't have access to. Or there might be a speed aspect, right? I believe that this market is going to be won by a single market participant, and the first person to win the market is going to own it forever. And so thinking through what makes the company a winner, but also a defendable winner. And is there going to be more than one winner in the market as well? And finally, I'll say VCs are pattern matchers by nature. We see hundreds of companies per year. In the last 3 years, just as part of Fund 2, our team has evaluated about 900 companies, and we've invested in 12 of them. So we've probably seen a lot more companies than founders have. And we know the common attributes of success. And so you want to be able to match to those common attributes of success, like having a great team, having a great market, having a great moat, but also be differentiated enough that we'll believe that you're going to drive outsized returns at the balancing act that you're playing there. And to say it out loud again, there's multiple different ways to build a company, and you don't need venture investment to build a great company. It's just one tool to do that. On the subject of pattern matching, here's just some patterns that come to mind when I see a neuroscience company cross my desk. So the first is that the science of neuroscience is really difficult. It's still a lot that we don't know about the brain. We don't know a lot about how it works when it's healthy, much less how it works when it's not healthy. We don't have great biomarkers. The blood-brain barrier is an obstacle. Invasiveness is an obstacle. And so all of those things are difficult. And so being able to speak to why a neuroscience investment is going to work, when even more so than other venture investments, neuroscience tends not to work, is really important. For a lot of neuroscience investments, we're talking about devices, right? Things like brain-computer interfaces. And the old saying for both life sciences investors like ourselves, but also like consumer generalist investors who might be interested in this space, is that hardware is hard. It's difficult to build hardware. The exits are smaller, the timelines are longer, engineering is an issue. And when it comes to generalists that are interested in some of these consumer applications for neurotech, like a lot of times they have the option to invest in software, which is just easier to build. So the bar for hardware investing is just a lot higher than other forms of companies. Neuroscience companies also tend to be bimodal when it comes to their clinical impact and what that means from a clinical risk perspective. So when it comes to disease-modifying therapies for a lot of neuroscience investments, the readouts are frequently very long or very subtle, right? So if I'm talking about Alzheimer's disease, those clinical trials are years long. If I'm talking about neuropsychiatric indications, those clinical readouts are really subtle, really difficult to find signal in the noise. And so also tend to be extremely long and expensive trials for anything that's disease modifying. And when it comes to venture investors and how we get graded, how long it takes for us to drive that return is an important factor in how we're graded on our performance. In the other end of the spectrum, in like the neurotech world, the hardware world, usually you can get really meaningful clinical readouts really quickly, but that's because the interventions are supportive and not disease modifying. So might be more attractive from a clinical risk perspective, but when it comes to what do consumers and health insurers and other payers want to pay for, usually they want to pay for disease modifying things, not supportive devices. It's a little bit of a catch-22 there. And so understanding why you're going to break out of these negative patterns is really important. This is the last thing I'll say, and then I'll get into some examples where we have invested in neuro despite all of this, is that opportunity cost is always something that's going through our head as venture investors. So $1 that I spend on this company is $1 that I can't spend on another company. And so when money is easier to make in other places, like my job is to not do difficult things or technically difficult things. My job is to make money. And so I do think that there is money to be made in neuroscience. And I'll say also that none of this speaks to the meaningfulness of the research or the impact of the research, but it's a small target to hit to be both a venture backable company and in neuroscience. The small target to hit to be a venture backable company, period, though. All of this being said, I'm very bullish on neuroscience, and we have made several neuroscience investments over both of our funds so far at Breakout. The top two were in the most current fund, and the bottom two were in our first fund. And I won't go through these one by one, but just calling out some major themes that we have here. At Breakout, we're very long in the peripheral versus the central nervous system. So all of these play with how does the periphery impact the function of the brain? Although I guess the olfactory bulb is arguably, like, it's on the outside of the brain at least, even if it's not technically the periphery. We are really excited about counter-consensus plays. So Cortex-Time was talking about neuroinflammation as a driver of Alzheimer's disease back in like the early 2010s when everyone was still talking about amyloid and tau only. And so that looked like a very different Alzheimer's company. Same with Phantom Neuro, to be a muscle-computer interface in a brain-computer interface world, very counter-consensus. And so we like that as well. And the last thing I'll say is we're really looking for folks who have lots of upside potential. So solving a very acute a very acute need, but with lots of different stories for how do you layer on a different market on top of that. And so I'll call out Canaery here, which is it's a brain-computer interface for sensing animals. All of the TSA airport dogs that you see today, like that's a very acute thing that needs to be solved, is that we don't have trans-species communication, right? So like, how do I really know what the dog is smelling? But when you start to digitize olfaction, like your mind kind of starts running wild with different possibilities and things like smart cities, right? So we were thinking about this as, you know, when we digitized audio and when we digitized video, we never could have predicted Zoom, like Tesla and all of those folks. And like working 100 years ago, just could not have predicted this. And so if we digitize another sense, what does that really mean in terms of different applications? Very broad applications. So that's what I mean when I talk about upside. So that's the end of my prepared remarks. I tried to keep things pretty high level, but I'm happy to dive into anything more specifically. And so let's kick off some questions. I'll stop sharing too, so you can see me.
Fantastic. Thank you so much. Wow, you hit on so many companies that we now really want to invite on for another seminar. Like my mind was also starting to race when you mentioned what was the name again?
Canaery, like canary in a coal mine. Yeah.
Okay. Need to work on the pronunciation here, but thank you so much. Fantastic. Okay, great. You've already touched on a few, like individual neurotech companies here. Maybe just to kick us off, could you perhaps go into a little bit more of an overview of how you see like the state of neurotechnology developing and really what makes this particular promising area to invest in. You've touched on this a little bit already, but for folks that are in the weeds in a specific field in neuroscience and neurotech, it could be useful for you, as an investor to just how do you look at the space as a whole?
Yeah. So I would say, broadly speaking, you can think of neurotech as, first of all, there's consumer neurotech and then clinical neurotech, the first bucket that you can go into. And there's a lot that kind of bridge both of those. So think about things like all of these sleep assistive devices, right, that are giving insights into health that are not necessarily above that bar for like being considered clinical, but are being sold to consumers today. So that's like division number one. And then beyond that, you get into modality division. And so are we talking about therapeutics? Are we talking about devices? Are we talking about diagnostics? And there's a lot going on in all of those worlds. And then beyond that, I think you can think about things in terms of, is this interventional, so meant to solve a problem? Is it meant to help me sleep, or is it meant to measure sleep, right? These are different things, measuring versus intervening. So those are the broad characterizations and broad buckets, and we see things happening all across that whole spectrum. Neuro has things in all of those buckets. I'd say the state of neuroscience right now is, it's been, I feel like I was like a little harsh on neuroscience in the presentation, because I think that historically it's been very difficult to invest in neuroscience for the reasons that I outlined. I think moving forward for the next 10, 20 and more years, we've hit the point of some very critical unlocks in the field that I think are going to make neuroscience, like we need more winners in this space, and we're starting to see more winners in this space, and that's really going to accelerate the field. So I think about unlocks in data science, which is so different today than it was 10 years ago, or even years ago. It's pretty wild how quickly data science has picked up in the last decade. And neuroscience, at the end of the day, part of the reason it's difficult, it's because it's really complex and it spits out a lot of data, and it's hard to figure out like what's meaningful in that data. I think on the device side, miniaturization has accelerated in such a way, and we're seeing some really interesting innovations in the hardware space, which means that you can get a lot less invasive than you could even, again, 10 years ago. Like you look at the first cochlear implants versus what a cochlear implant looked like today, and how profile or how low or high profile that device is. And it's pretty remarkable how quickly that's accelerating. I think also a lot about multi-omics, where it feels weird to say the sentence, at the turn of the century with the genomic revolution, people thought that was really going to elucidate all of these different disease areas. And it turns out that genotype and phenotype are very different things. And so the genomic revolution was so impactful for oncology and rare disease, but a lot of therapeutic indications outside of that have been really hard. But those are also the places that people are excited about today. Like we picked all of the low-hanging fruit when it comes to oncology and rare disease. And now it's like, how do we get back into complex disease and start to think about proteomics, transcriptomics, and other more phenotypic omic readouts to really understand disease processes better? Then I think neuroscience is going to be a really big winner there.
Amazing. Thanks for that. That was already like giving us quite an interesting view on like future developments as well. I want to give it up to Mattia to ask a question, and this is your guys' time. If you have a question, just feel free to raise your hand or put it in the chat if you can't unmute. And I will only come back with my plethora of questions if you guys don't ask anything. Mattia, why don't you go ahead?
Yeah, sure. Thank you, Alison. Thank you, Dana, for the very interesting presentation. And here I have a question more on your background and your career path. It's, for me, first of all, very interesting and actually nice to hear that there are more and more PhDs entering in VCs. But something that I still would like to know your opinion about is how important it is to have a bit of more specific background into, for example, business and economics. How much does it count for having an entry into VCs careers?
Yeah, I think VC is an apprenticeship business, just like sciences. So I think that the important thing is to, particularly for entry-level positions, is to show an interest and to show a kind of moxie, right? So a lot of the things that I was doing in graduate school and in that position at the Entrepreneurship Center right afterwards were things that I was doing in my spare time, right? I was doing pro bono consulting. I was trying to find a company, right? I wasn't being paid for any of that. And I think that obsession is the word that's coming to mind, but I think it's the wrong word, but we'll go with it for now, was showing that this is something that like I am motivated enough about that I'm willing to work nights, weekends to really learn it, I think is what really helped get me an entry into a VC position. Because VC, at the end of the day, I work like a light week for me is 60 hours. So like it's a hard job and you can make it your life. It's really easy to do that, but a lot of VCs do. So that's number one. Number two, when it comes to being like a PhD in VC in particular, there's two big buckets that I see folks go to. So number one is the folks who go into like management consulting backgrounds. They like work for a McKinsey or a BCG to understand the pharmaceutical industry really, excuse me. And then they go to one of these Boston blue chip funds, who I like don't mean that to sound dismissive at all, because they do really good work and they're running very specific on therapeutic assets and therapeutic platforms. And that's what they do all day, every day. And that's one entry into the career. And there you're really trying to show them that you know, understand, and can deploy a specific playbook. I did not go that route. And I see more and more folks in my shoes who are investing in areas where there isn't necessarily a playbook. Like I understand the therapeutic playbook well enough that I can pattern match to it, but I haven't done a discounted cash flow analysis in 10 years. And it's just not part of my day-to-day job. So understand that world well enough to play with it. But a lot of my time is spent in other worlds where there isn't that type of playbook to run. And I would say for folks on my side of the aisle, really what your PhD gets you is less that specific domain knowledge and more, I know how to learn really quickly, right? Like only a sliver of my time is spent in neuroscience. I spend a lot of time in immunology and pharmacology and synthetic biology, but I can get the lay of the land really quickly because I have that. So that's how I see the world playing out. More folks enter the arena from the PhD universe, like what other career paths they take.
And for your insight. Very appreciate it.
Thanks a lot. Katalin, you're next.
Oh, yeah, great. Thanks so much. You can hear me, yes? Very good. Thank you, Dana. Very fantastic talk. So I'm a neuroscientist myself. I'm assuming quite a few of the people here are. I have like a broad question about VC overlap with AI safety and particularly also nonprofit. I'm quite confused. I'm very green. I literally know nothing about this, how to get funded. My entire life has been academia and academia funding. Can you tell us a little bit about, is this overlap space for VC Neuro with AI safety like one person in the world or one VC org in the world? And then also the nonprofit. Are VCs interested, in your opinion? Because what I'm getting is a lot of technology development, which is obviously what the return is all about. So yeah, so I'll just leave it at that. Thanks.
Yeah, and we see that in our world a lot. We think about this as frequently as like non-dilutive funding is the bucket that we put it into. So not only government grants, but increasingly the Chan Zuckerbergs of the world, the Gates Foundations of the world, they're very active at deploying money into venture-backed companies or projects that are not quite ready for venture yet, but are going that route. And I think that a lot of the pull in those organizations is really that these folks want to not just fund science, but fund science that's going to be impactful out in the real world. And so the translation gap type of universe is very much where a lot of these people play. Oftentimes they have gobs of money, which is really nice because that's money that I don't have to spend as a venture investor. A lot of them also have like whole federated systems. So our firm actually spun out of Peter Thiel's family office, which has spun out charitable organizations, but also venture, like a lot of venture funds, right? Like Founders Fund, ourselves. And those folks tend to talk to one another, right? So we have companies that get a grant from the Bill and Melinda Gates Foundation, and now you're also plugged into their various mechanisms for making dilutive investments as well, either at the venture level or a lot of these places go all the way to public market. So it's a constantly evolving ecosystem. And I think that it also has to do with, at the end of the day, who has money, how do they deploy it, how close do they want to be to the deployment? Because we venture, like a lot of VCs, get money from high net worth individuals, and they don't want to think about individual companies. They just are excited about our overall thesis. And so, yeah, it's as complex as VC is. Same thing in all of these VC adjacent areas. Yeah. I hope that answered your question.
A little bit about AI safety. Did you have a comment on this at all?
I don't know much about AI safety, so I can't really comment on that. Yeah.
I know 2 funds investing in AI safety from a business perspective only, and it's still a relatively, I think, new field. And even though I think in our understanding, at least at Fawcett, there's some useful overlap between neuroscience and neurotech and AI safety, I think even that field in itself is very young. So it's 2 very young fields, but there's definitely, I think, some interesting opportunities. We're having a workshop next week that is trying to explore a few of them. But all right, if anyone else has a question, please raise your hand or just drop it in the chat at any point. In the meantime, I would love to know from you as well. Whenever we have folks coming in our longevity seminars, especially from the investment side, there's always like a big grieving session about the FDA. And so I'm just really curious what you think about, regulatory progress. Is this something that is really hampering neuroscience and neurotech in general? Are there specific things that founders should be looking out for where companies usually struggle? Or where, as an investor, are there specific, application where you're just like, oh, this is just going to take forever. Don't bother, or like, we need more progress on the regulatory side?
Yeah. Yeah, I think there's a couple ways to think about this too. Is the first, I think the overall vibe, for lack of a better term, is that our regulatory environment, like, if something is broken, and I think everyone knows it. So we have seen in the past couple of years the FDA really interested in phase 0 clinical trials, really interested in proximal biomarkers, really interested in, like, how do we make something like Alzheimer's tractable? We're like, okay, you can go from phase 1 to phase 2 because we know that you're engaging the target, and like that target has a really good mechanistic hypothesis around it. So let's start to get it into more people. So overall, there's a willingness to try new things. But of course, with like the seesaw that the FDA is on is like protecting people, and that's really important. I'll say also, like, the other thing and the other regulatory body in neuroscience that we think a lot about is like the DEA as well. So the news right now that the Biden administration is starting the process of rescheduling marijuana, that's neuroscience news, particularly when we seem to be at this kind of inflection point for psychedelics and bringing those back into the fold, as well as with the opioid crisis that is now in its 3rd wave and ongoing. And I saw some folks here, like in San Francisco, we see it every day. And so I think there were several decades where consumer versus like patient were treated as entirely distinct populations, and where FDA and DEA, it's like either you go the FDA route and then you're safe, or you like go you get into the DEA and you're unsafe and it's bad. And I think that first, we now understand that it's a spectrum from patient to consumer, and that if someone is having sleep issues in their 50s, that person is really likely to be an Alzheimer's patient in the future. And so how do we treat these middle and these supportive, and lifestyle is a bad word in my universe, but how do we treat those all along the way, that taking care of health outside of a clinical setting can really move the needle in a clinical setting? I think the other thing that we're realizing is that FDA approved is not safe and DEA regulated is not dangerous. Like, those are not synonyms, right? The opioid crisis was started with FDA-approved medication. And marijuana has sent how many millions of people to jail for something that we now understand to be very effective. And like psychedelics could potentially have clinical applications in addition to recreational applications. And so I think some of this like rigid categorical thinking is starting to break down in a way that I find very encouraging, because I think also that when you have those rigid categorical thinking, and now I'm just like ranting a little bit, but when you have rigid categories, you're a lot more likely for folks to do things in the extreme, right? Take psychedelic mushrooms, for example, right? Historically, from a medical ethnobotany perspective, that's something that folks for thousands of years used medicinally in low doses, and it wasn't about tripping or anything like that. And then all of a sudden, hippies start using it, and Nixon freaks out and puts it in this like very high DEA schedule, and we start cracking down on it. And for a couple of decades there, folks were like, look, I'm going to bother to get mushrooms. I'm going to get ripped out of my head on mushroom person. Now, like the last couple of years, we've seen like microdosing return, and like a return to the normalcy that thousands of years gave us, where like I think the last 50 years of the regulatory regime, some very good things came out of it, but also a lot of like weird skewing effects came out of it as well.
Yeah, it definitely created a lot more counterculture and a lot more, Kanki, see the mirror pranksters, and that they dug themselves their own hole there. But yeah, okay, super interesting. Yeah, interesting that you touched on psychedelics. There's definitely like also a lot of like really great work by MAPS and so forth, and many like of the Bay Area orgs that I think are really trying to push in that finally after I think 25 years or something of fighting the good fight. I think Rick Dublin and okay, I have another question which is more on the kind of like AI for ML, for neuroscience side. Do you see that becoming like a really big unblock? Are you more interested or like becoming more interested in, companies that are trying to leverage that, whether or not they have, AI on their pitch deck and it's actually something different or whatever? But do you see like a shift there of AI impacting the neuroscience, neurotech space as it's relevant for you, or the other way around? Whether or not it's now AI safety related, but just, on the AI front in particular, that'd be really interesting.
Yeah, and I think that AI, particularly in the past, call it year and a half, with the Gen AI revolution, like I'm going to leave that to the side, because I think that we need to go through the first wave of the hype cycle there to figure out what it is that we actually have. So when we think about AI, ML in our field, usually what we see it being used for is understanding big amounts of data instead of like, again, the more interventional like push of Gen AI, which I think we have to better understand how that works before we can really apply it to neuroscience and human health. So usually what we're seeing, and I would say that, the two neurotech investments that we made in this fund, both of them are very much enabled by AI. And I think that it's because, again, it's this being able to read and understand data meaningfully, either when it is very complex, in the case of Canaery, where these are like really complex signatures that you're getting, reading the olfactory bulb in real time. So how do we make sense of that very noisy data? The other place that we see it as being really important is like with Phantom Neuroscience, the muscle computer interface company. You need AI to do things at the speed that it requires to do things in neuroscience, lifelikeness, the uncanny valley, being able to decode things in real time. It becomes really important because our brains are astronomically fast, right? I don't have to tell this crowd. Brains are really fast, but digesting data with software is impossibly slow compared to the brain. And so getting that AI layer to do things quickly and good enough, I think is also the big unlock there for neuroscience specifically. And I think that's quite unique to neuroscience, is that the speed of being able to interpret that data is
great. Yeah, thanks so much. I have a few kind of like very specific questions that I often get asked when our fellows are trying for me to make introductions to our mentors that are also funders. That, hopefully not too boring, but like quite concrete. And I'm just like channeling my inner possible founder here. One, for example, how important is the deck?
It's what I review before I'll take the call. So folks who won't give me a deck before a call, I'm probably not going to take a call with you. I think it's funny. I don't think it has to be particularly sleek or beautiful. That helps. But also I've seen decks that are like real basic and they get the point across. And I'm like, I know what you're driving at. And like, I'm matching to the right part of the pattern. And so, yeah, I'll take the call, even if it's an ugly deck. And there's, someone has, and if you just Google around for a collection, look for the Airbnb first pitch deck. I know is one that is like ridiculously simple. Like, VCs don't need it to be the fanciest thing. We might pay to make it fancier after we make an investment. We've done that quite a few times. But also, yeah, it doesn't have to be like super nice. It just has to get the right message across.
Oh, I'm looking at it right now. It is very simple.
So simple, right? It's not beautiful. It's not complicated. It's just, here's what we do and here's why that's an unlock. Yeah.
But it does have the market size on there, which I'm assuming really quite important.
It does need to have a market size in your deck, and it needs to be multiple billions. Yeah.
Where you get the multiple 100 million. Okay. How important is the introduction? Do you take cold email calls at all, or probably not?
I read the cold emails, but I would say that the chances of me responding to them are really low because I think it's a quality filter, right? I think that if you have enough activity and you go to enough events and you're living enough of the founder life that you get connected to the right, crazy connection of people to like find your way to me. I'm just a lot more likely to look at something that someone sends to me. Number one. Number two, me specifically, I'm probably the worst person at LinkedIn. Like I check it once a week if I have the energy, and I frequently don't have that. But I know like some VCs are like very good about that stuff, but I am not good about that stuff. So if you send me that connection request with no message on it and no context, like I say no because I don't know who you are. But some folks have a higher LinkedIn tolerance than I do. The last thing I'll say is that the double opt-in intro is so important. A big pet peeve of mine is someone sends me an introduction unsolicited, because it might be like if someone sends me a deck and I'm like, hey, we're at a point in our fund cycle, we're not going to do another neuroscience investment until the next fund, then they can say that back to the person and no one's wasting any time and like send that one email versus they introduce me that I have to take the call. And then it's a waste of everyone's time. And it's always awkward. It's always silly. Just ask, even as you're asking someone to connect you to someone, say that you want it to be double opt-in. It's so important.
Yeah, it makes my life extremely difficult, but I always then ask for the blurb, then send it to the person, then go back and forth. And I think 50 years is trying to build like an automated version of that now to ask for double opt-in where people can like upload the blurb and stuff. But yeah, anyway, I think it is really important. I think the only time when I don't do it is when people explicitly say, hey, it's okay, you can just introduce me to everyone. In the network, it's fine. Like I don't need to always say yes, but you do have to wait for that too. Okay. Another one, how do you personally source deals? How do you go fishing, or like, how do you keep your eyes open there?
Yeah, so we just did an analysis of this actually. So I'm not going to remember the specific numbers, but the plurality of deals, something like 40% for us, come from co-investors. So if I am doing work on a deal, I get excited, I put in a term sheet. Usually it's before I put in a term sheet. I start sharing around the deal to other investors who I know and I like and I want to work with. So that if I do get excited to put in a term sheet, I know who else is going to be interested, who can spin up a process really quickly. And so yeah, a lot of my inbound comes from that. Or everyone on our team has multiple people across the most respected firms for our world, where we just talk about what are we seeing in deal flow? What are you hunting for? Is there a thesis that you're trying to fill? Is there a certain type of deal that you want to do? So we're all always talking to each other behind your back. That's our number one. Number two for us is we have an umbrella called Activators, which includes university technology transfer offices. It includes accelerators and incubators and all of the demo days that we go to, where those are like, you see a lot of stuff. So it helps you get the lay of the land. The probability of something coming out of those is really low just because the numbers are so great. But it's important for us to go to them because occasionally they do. So Canaery, we invested after they went through SBIR. So occasionally you find like the right one, but also you're learning about the industry overall. And a lot of those demo days, by the way, are not specific for investors. You can go to like Hacks or MD as just an interested person who wants to watch. And then the last bucket for us is other folks in our network who are sending us deals. So this is either CEOs who we've invested in before. This is also where we bucket the folks who, like, we met the company at a previous round but kept the relationship going with them because it wasn't the right deal, but we liked the company and wanted to see what happened. This is also where we put our LPs send us things. And so she's the other people in our network. Or I think we sourced one deal because the CEO had a kid in preschool with someone or something, right? It's like everything else.
Oh, it's a wild one. No kids are safe here. They're all, individual.
Networking nerds. Yeah.
Okay, great. Another one is that we really often get, I think, especially in our community, because we have researchers and people that are more, I guess, like from the get-go entrepreneurs, is like, how do I decide whether or not to spin something out? Like, when is something like ripe for that stage where you guys could be interested in? Like we get many fellowship requests for like, I could be doing a company. Maybe it's more of an academic project. Maybe now these days it's an FRO or do you have any idea where you're like, oh, you're a little bit too early? You're like, right at the takeoff point. A good way to think about it.
Yeah, I think the best way to test that out is to start talking to people and say, hey, I'm thinking about starting a company. What do you think about this? And those people can be VCs. I think other founders are criminally underutilized by founders. Like founders should all be talking to one another, all be friends with one another and understand, oh, you're successful a couple steps ahead of me. Like, how did you do it? Talk to other founders, talk to VCs, talk to people in your tech transfer universe, just like talk to people and bounce your ideas off of them. So that's number one. In terms of like, when is a company ready, just generally overall rule of thumb, I would say that there's a specific trajectory that a company is on when it starts to take venture funding. So like a Series seed company or a seed company is doing one group of activities. Series A company looks very different, is doing a different group of activities. Same for Series B and beyond. And that's going to be very different for a therapeutics company versus a device company versus a diagnostic company versus a consumer company. And so doing your research to be like, okay, what bucket do I fit into? And then what is the growth path for companies in that bucket will tell you, okay, am I ready for a seed yet? What are the activities folks are doing at seed level? So, for example, in therapeutics platforms where we spend a lot of our time, the seed round is usually, does the platform work? Does it generate meaningful hits? Then at the Series A, it's turning those hits into assets and getting those assets close to the clinic. And usually also getting a partnership on the platform with other companies who want to get assets out of your platform. And then after that, like it's the clinical trial, managing a pipeline. I look like a mature therapeutic company. So these are knowable trajectories. And the question is, am I ready to start that journey?
Interesting. Yeah, that's a great way to think about it. We only have about 2 minutes left. I want to ask you, is there anything that, is another secret, either something where you're like, oh, this immediately turns me off, or anything else, I should have asked where you wish you got that across before?
Yeah. I think the big takeaway, if and when you're ready to talk to venture investors or just want to start the process there, is that it's a conversation. Like, you're not selling me something. Like, there is some salesmanship to it, and you do have to be able to sell. But I want to have a conversation with someone. Like, I want to understand how you're thinking about risk. I'm sorry, your company is not risk-free, so don't try to tell me that. And I want to figure out if I want to work with you for the next 10 years. And so I think that's the number one mistake that folks make, is that they think that it's about getting the check and then they run off and do their thing. And no, we are working together for as long as you are holding on to my money. And so I'm trying to figure out how you're going to be to work with. And I'll say also like a secret that all of us have is that when we like give feedback, there's folks who get less specific feedback. And then there's like the tier of people who have earned the real unvarnished feedback. So like you got to earn me really giving you the brass tacks of being, if I'm not funding you, hey man, like this person on your team does not reference well. Or hey man, like this investor you have in your cap set, people don't like. I am not going to tell everyone that after one call. Like you got to earn that real honest feedback. Yeah.
That's so funny. It's a very German way. You like most brutal to your really close friends.
Yes. Very exactly. I like that.
Honesty. This was so informative. I've learned so much, especially I think on the side of, you may work with them longer than some people are married, or that most people are married, that, that it's really that relationship. Thank you so much, Dana. This was extremely, supremely useful. I really appreciate it. Thanks for your great questions, everyone in the audience. I'm really excited to get this up on YouTube. I think the ones where we just interview funders are usually the ones which, are just the most useful to people, because it's really hard information to come by if you're just trying to get started. I really appreciate your time. Thank you very much.
Yeah. Thank you so much for having me. This was very fun. And thank you to the audience.
Thanks, everyone. Have a good one.
Have a good one.